Welcome back to the channel, and thank you for joining me. I'm Algabot, and here we break down automated trading strategies for MetaTrader 5, one expert advisor at a time. Today we're examining a strategy called Force Index Pullback Continuation. It's built on Alexander Elder's Force Index, a volume-weighted momentum gauge, and it's designed to join an existing trend after a brief pause rather than chasing the very first move. By the end of this video, you'll understand how it reads momentum, how it times its entries, and how it manages risk with the average true range. Remember, this is educational information only. Let's get started. Let's start with the big picture. Force Index Pullback Continuation is a trend continuation expert advisor. Rather than trying to predict tops and bottoms, it waits for a trend to already be in motion, then looks to enter after a short pause against that trend. The engine behind it is the Force Index, a momentum tool created by Alexander Elder. What makes the Force Index interesting is that it blends three pieces of information into a single number: the direction of a move, the size of that move, and the conviction behind it, measured through tick volume. In plain terms, the raw Force Index is the tick volume multiplied by the change in the closing price from one bar to the next. A large price move on heavy participation prints a large force reading, while the same move on thin participation prints only a modest one. The strategy then smooths that raw force with two exponential moving averages that play very different roles. The slow force average, with a classic length of 13, represents the force trend. While it stays positive, buyers are considered to be in medium-term control. While it stays negative, sellers are. The fast force average, with a classic length of just 2, is the timing tool. It swings back and forth across the zero line on every small pullback and every fresh push. Alongside those two force lines, the strategy adds a simple price exponential moving average, defaulting to a length of 40, to confirm the direction of the trend itself, and it uses the average true range to size its protective stop and its profit target. This approach is generally suited to liquid, trending instruments such as major foreign exchange pairs, gold, and stock indices, on timeframes ranging from intraday to swing. It's an educational example of combining momentum, volume, and a trend filter into one rule set. As always, trading carries risk, and losses are a normal part of any strategy. Now let's walk through exactly how the strategy makes a decision. Every rule is checked once, on the bar that is just closed, so there's no acting on an unfinished candle. For a long setup, three conditions must all line up. First, the strategy checks the trend of price itself. It requires the closing price to be above the price exponential moving average, and it requires that moving average to be rising compared to the previous bar. That confirms an uptrend is in place. Second, it checks the force trend. The slow force average must be above 0, which tells us buyers have been in medium-term control. Third, and this is the timing piece, it waits for the fast force average to cross up through the zero line. In other words, on the prior bar the fast force was at or below 0, reflecting a pullback where selling briefly took over, and on the current bar it has pushed back above 0, showing that buying force has returned. When all three align, the strategy signals a long entry. The short setup is the exact mirror image. The closing price must be below a falling price moving average, confirming a downtrend. The slow force average must be below 0, confirming sellers are in medium-term control, and the fast force average must cross down through the zero line, meaning an upward pullback has just given way to renewed selling. When those three conditions meet, the strategy signals a short entry. The idea behind this timing is that in an established trend, the fast force dips against the trend during a pullback and then returns through 0 as the dominant side reasserts itself. The strategy aims to join that resumption at a more favorable pullback price, with the medium-term force still on its side. Risk management is handled with the average true range. When a trade opens, the stop loss is placed at a multiple of the ATR away from entry, using the stop multiplier, and the take profit is placed at its own ATR multiple, using the target multiplier. With the default settings, the stop sits 2 ATRs away and the target sits 3 ATRs away, giving a reward-to-risk shape of 3-2. The expert advisor also holds only one position per magic number at a time, and it uses a fixed lot size. It does not add to positions or reverse. It simply waits for the next clean setup. Let's look at the meta editor code, just as it runs inside the expert advisor. At the top are the input parameters. The trend period, defaulting to 40, sets the length of the price moving average. The fast force period of 2 and the slow force period of 13 define the two force averages. The ATR period of 14 measures volatility for risk, and the two multipliers place the stop at 2 ATRs and the target at 3. There's also a fixed lot size and a magic number that labels these trades. Below that are the two Boolean flags for the zero-line cross. The variable cross-up is true when the fast force was at or below 0 on the previous bar and is now above it, while cross-down is the reverse. The strategy also reads the close of the just closed bar. Now look at the buy block. The flag go long is true only when the fast force crosses up, the close is above the price moving average, that average is rising, and the slow force is above 0. When all of that holds, the code fetches the ask price, sets the stop loss 2 ATRs below entry, sets the take profit 3 ATRs above, and calls trade.buy. The sell block is the mirror. The flag go short requires the fast force to cross down, the close below a falling moving average, and the slow force below 0. It then reads the bid, places the stop 2 ATRs above entry, the target 3 ATRs below, and calls trade.sell. Both sides share identical, symmetric logic. Let's bring this to life on a chart. On the price panel, you can see the candles along with the blue trend moving average. Below the price, in the subpanel, is the force index, with the gold line showing the fast force average and the blue line showing the slow force average, both measured against a central 0 line. The green area above 0 represents buyers in control, and the red area below 0 represents sellers in control. Watch the opening candles. Price is climbing, printing higher closes, and it sits above the rising moving average. In the subpanel, the slow force line is comfortably above the 0 line, telling us the medium-term force belongs to the buyers. So the trend filter and the force filter are both pointing up. The strategy is not chasing this initial push, though. It's patient, and it's waiting for a pause. Now look at the next two candles. Price pulls back and dips lower, and in the subpanel the fast force line drops beneath the 0 line into the red area. This is the pullback the strategy is looking for. Importantly, the slow force line stays above 0 throughout, so the bigger picture is still bullish. This is where the strategy prepares to act. On the resumption candle, price pushes back up strongly and closes higher, and the fast force line crosses back up through the 0 line into the green area. That's the moment all three conditions align. Price is above the rising moving average, the slow force is still positive, and the fast force has just crossed up. The buy entry marker appears here. The strategy enters long at the resumption of the trend, at a more favorable pullback price, rather than at the top of the earlier move. The stop loss is placed below, at a distance set by the average true range, and the take profit is set further above at a larger ATR multiple. From there, price continues its climb over the following candles, extending the uptrend. As it reaches the take profit target above, the trade closes for a gain at that marker. Notice the reward to risk shape. The target sits 3 ATRs away while the stop sits 2 ATRs away, a 3-to-2 structure. Now the market changes character. Price rolls over from its high, prints lower closes, and slips below the moving average, which begins to fall. In the subpanel, the slow force line crosses beneath the 0 line into the red area, signaling that sellers have taken medium-term control. The trend filter and the force filter have now flipped to the downside. Watch for the mirror setup. Price makes a small pullback higher, and the fast force line pops back above 0. Then, on the next candle, price turns down again, and the fast force line crosses down through the 0 line into the red area. All three short conditions now align. Price is below the falling moving average, the slow force is negative, and the fast force has crossed down. The sell entry marker appears here. The strategy enters short at the resumption of the downtrend, placing its stop above and its take profit below, again using ATR multiples. Price then slides lower into the final candles and reaches the take profit target, closing the short at that marker. In both directions, the logic is the same. Confirm the trend, confirm the force, and wait for the fast force to cross 0 before joining the move. This is illustrative only, of course, and real markets will not always follow through so cleanly. So there you have it. Today we broke down the Force Index Pullback Continuation Expert Advisor. We saw how it uses Alexander Elder's Force Index, weighting momentum by tick volume, and how it combines a slow force trend, a fast force timing line, a price moving average, and the average true range into one clear rule set. We walked through the symmetric long and short conditions, the code that powers them, and a candle-by-candle example of both a buy and a sell scenario. Keep in mind that everything here is for educational purposes only and is not financial advice, a recommendation, or a solicitation. Every strategy carries risk, and losses are part of trading. If you found this helpful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and leave a comment with the strategy you'd like me to cover next. You can learn more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.